Welcome everyone. Welcome to this week's Market Wrap. I have with me Mr. Pankaj Pandey, and as we are talking, we are back to where we were. I think last week we are at 20,000. Although there were a lot of moments, there were a lot of scares in between, there were a lot of happiness in between, but we are where we were. So from here on, what does it look like for the markets? And of course, the perennial question which has been there for the past 3-4 months: when will this bloodshed stop?
So hi, good evening, Vishu. Overall, yes, third consecutive week of market sort of extending, selling now down to about levels like say 23,000, and this is a sort of a key support because it's a 52-week EMA for the markets. And like everyone else, we have also been waiting for a pre-budget rally or some kind of a pullback in the markets. But historically, we've seen that whenever we have seen third consecutive months of negative returns in the market, subsequent 3 months have been quite fruitful. So we are quite hopeful of a pullback in the rally. Then I think overall sense is that the dollar index is no longer touching new highs. So obviously, while it has sort of come down from the peak levels, but even in the previous Trump era, we have seen that the dollar index usually sort of peaks out and then sort of corrects. So while it has yet not meaningfully correct, but our sense is that overall dollar index is not inching up. And I think good part this week was the IT index, which was in the limelight, gaining about 4% kind of a overall gain. But yes, our sense is that when you look at market from F&O perspective, the FIs have sold about 65,000 odd crores in the January month itself. And if you sort of look at the period when the selling had sort of intensified, which is from October, they've sold more than 2.2 lakh crores, so which is a sort of a quite a hefty selling. And at this point in time, they're sitting on one of the highest ever net short position, especially in the index future, what we have seen. And typically, our sense is that whenever you have the monthly settlement, which happens, which is what is expected next week, I think it is possible that if some bit of a net short positions are sort of cut in, so possibly a pullback can be there. But again, things are still too volatile to sort of comment because you'll have budget a week after. So that is where I think the reaction will come. But yes, like everyone else, we are hoping for some pullback in the market, given the fact that we are in a oversold situation as of now.
Absolutely. You mentioned budget. What, and I think this is the real meat of the topic today because everybody is wondering, it's on everybody's mind. What are our expectations from the upcoming budget, sir?
So I'm not going to put a very laundry list in terms of what to expect from the budget, but I think what is required at this point in time is growth for the economy, and I think for that it is extremely important that the growth template is followed. See, from say FY22 to FY24, the overall capital expenditure allocation moved up by 30%. Now, this year, FY25, since we had number of elections, including Lok Sabha elections, the overall spending from 11 lakh crore is expected to be down to about 10 lakh crores, which means that you're going to see a growth of some 7, 8 odd percent, and which is why the growth numbers are slow. So what is expected is a big boost there. Because see, every 1 rupee which is spent on infra produces, or 100 rupees spent on infra produces 300 rupees of GDP. Whereas if you're sort of doing any kind of a freebie, say if you're transferring 100 rupees, what will get added to the economy is only point 90 rupees. So from that perspective, I think capex spending is the need of the hour, and ideally it should take center stage, and that should be the only thing which can drive. Because see, while everyone expects private sector capex to sort of come up, and nothing wrong in it. But I think when you look at the entire geopolitical situation or the kind of uncertainty which is there with Trump coming in regarding a number of sectors, so it is unlikely that the private sector capex is going to sort of jumpstart from current levels anytime soon. Probably it is going to take some time. And so, which is where I think the government or the central government needs to step in. And my senses or my only one expectation from the budget would be a 30% increase in the budget allocation for capital expenditure. So from about 10 lakh crore, it should go up to about 13 lakh crores. I think that is the only figure which I'm going to watch in the budget, because it is possible that the government might get a good RBI dividend. So not really compromising much on the fiscal deficit side. Yeah, they can still manage. So remains to be seen. I'm not in favor of personal tax cuts and all of it. I think the need of the hour is a 30% increase in the capital expenditure allocation.
Absolutely, sir. There were also a lot of results this week. A lot of large cap names were up for review. So I think let's start with HDFC Bank first. How were the results like?
Oh yes. So you had number of Nifty company results. Now HDFC obviously is the top one carrying the highest weightage. Now when you look at the numbers were steady, and which is why we haven't seen greater reaction on both the sides. Now to sort of put it into perspective, what the company is looking to do is that, see, this year the advanced growth for them is going to be muted about FY25. In FY26, they are going to match the industry growth rate. And FY27 is when they will be exceeding the industry growth rate. And I think probably our sense is that it might spend some more time because you really do not have near-term triggers. A good part is that the asset quality continues to be very good for a bank like this. Very little margin pressure, about 3 bips kind of a decline quarter on quarter we have seen. And I think what the company is also waiting for is a loan deposit ratio to come down to about 90% from 98%. I think that will happen in FY26. So we have a hold rating, but our sense is that the risk reward is quite decent in the stock. And as and when it steps up or is able to achieve this LDR ratio of 90%, I think that is when the growth acceleration will start to sort of happen. And that is when I would expect the stock to sort of do well as well.
Absolutely. Let's move on to, I think, HUL next. A lot of a big chunk of shareholders have that. So what's our outlook on HUL?
So HUL, yet another quarter of muted performance. In fact, this is the fifth consecutive quarter where the revenues have grown in low single digits and absolutely flat kind of a bottom line. And I think the commentary is also not even good because when you look at the management said that from a stable demand environment, they are looking at demand environment moderating because people have started to sort of downtrade in terms of higher value pack to lower value pack. And which also means that the margin expansion will not happen given the fact that some of the commodities have gone up. So margins at best could remain in the range of say 23, 24 odd percent. And while the stock has corrected 20%, but given the commentary, we would not really expect any kind of a booster to sort of or growth to sort of drive the performance. While the valuations have corrected, so actually used to trade at 55 and even more than that. Now it's trading at about 43 times FY27 earnings. So from that perspective, valuations are definitely good. But I think what will take HUL to move is some kind of a good direct benefit transfer, which like I said, I would not really wish in the budget to sort of come. Because that is when possibly you will see some kind of a pickup in the overall consumption. So HUL, I think nothing is changing as of now. Muted demand and expectation continue to remain muted as well.
Absolutely. Another Nifty 50 stock, UltraTech Cement, was also on the cards. So what's our outlook there?
Well, a big positive surprise there because see, overall sense was that volume growth could be about 2-3 odd percent given the subdued expectation. This company delivered a volume growth of about 11%, so was very good. And I think what the management also said was that while the pricing is up only say 1% quarter on quarter, but January onwards, the prices are still better. And so even Q4 expectations are expected to, or overall numbers are expected to be good. Good part for this company is that volume growth is driven by the capacity addition. Last 2-3 years, they've added about 50 million ton kind of a capacity. And they're looking to add about 44-45 million ton in the next 2 years. So from that perspective, they are chasing a capacity of 215 million tons. On top of it, our sense is that they are talking of about 250 to 300 rupees per ton kind of a cost reduction. So while their EBITDA per ton obviously has improved from quarter-on-quarter basis, but it has the potential to improve further. I think cement is one of the few sectors where we believe that next 2 years they could easily be surpassing Nifty growth earnings. And UltraTech being one of the largest leader, we feel it's a buy. Risk reward is quite attractive with a target price of about 13,500. So definitely a positive surprise there.
We also had Dr. Reddy's Labs, and I think it did, the price got hit as well a little bit because of the results. So what happened there?
So yes, no. When you look at numbers, obviously the numbers were not so great because you look at their biggest market, US, the growth was only 1%. While when you look at overall growth is 16%, largely because of the nicotine replacement therapy business, which they've taken in Europe. So from that perspective, the numbers have not been good. In fact, there has been a bit of a margin pressure as well, and which is why we have seen the stock sort of taking a hit as well. But our sense is that next 2-3 years, the company is poised very well. I think they've got about 20 product launches. Most of the products are complex, where the margin profile is better. Then I think they are also looking to participate in this GLP-1. Now, GLP-1 is going to be the biggest drug going forward because everyone wants a weight loss. And I think a lot of Indian celebrities have used those products. So somewhere down the line, next 2-3 years, the opportunity looks good from that perspective also. So while yes, numbers were not really great, but the outlook remains quite good, and which is why I feel that it's a buy at current levels, despite the current weakness. So I think Dr. Reddy looks good to us at current levels.
Absolutely. Right. I think one of the highlights of the week was the IT sector in itself, and that carried Nifty to a great extent as well. What is happening in general in the IT sector? I mean, both large caps and the smaller IT companies, or the new age IT companies, let me say.
So when you look at IT index, like I said, was up 4%. When you look at the big boys, the tier one names like Infi, TCS, Chiltech, I think they benefited from the fact that Trump is not going to be really very strict with H1B visas because these companies typically get most of that. Because see, in previous Trump administration, the rejection rates had gone up. Then he was also forcing companies to hire or do more of local hiring. Plus, they also need to be sort of paid very well. So from that perspective, some bit of a relief there. So which is why it helped the tier one IT names in terms of a better price performance. Otherwise, if you look at from a growth perspective, most of these tier one companies will grow at 5 to 6% in FY25. 6 to 7% in FY26 and about 8 to 9% in FY27. Now, when you look at the tier 2 IT companies, especially the likes of say Persistent and Coforge, these companies, for example, Persistent is growing at about 23% CAGR in the last say 4-5 years. Next 7 years also they are looking to grow at a similar sort of a range. Coforge also, while the quarter-on-quarter growth was higher at 8.6%, but if you sort of exclude then I think the organic growth was slightly lower. But overall, again, this is another company which is going to grow at high teens. Emphasis is another company which came out with muted set of numbers, but what they're clearly highlighting is that Q4 is going to be one of the best in the last 3 years. So from that perspective, I think the tier 2 IT companies are clearly sort of outpacing the tier 1 players by a big margin in terms of growth. Now, they are obviously not cheap. While you would look at, say, TCS or Persistent would be trading at twice the multiple of what Infosys trade. But I think a lot of these companies have been delivering superlative growth, and which is why what we like is, say, Persistent. I think this is one of the best tier 2 performing companies. And Newgen has corrected. So that is another stock which we like within the overall IT as a space.
Absolutely. How about Mazagon? I think there was a lot of news about Mazagon as well, signing a lot of contracts.
Oh, yes. So Mazagon Dock, if you look at 2-3 things. One, when you look at their order book, that's about 39,000 odd crores, which is 4% of their trailing 12-month revenues. What is they are talking is a fairly large project size. So one is, I think, what is coming out clearly is that they've been shortlisted along with the Thyssen Group for the P75 I project, where we are going to build 6 submarines with a cost of nearly 70,000 odd crores. And in addition to that, there is also a possibility of 3 additional Scorpion class submarines. So where the costing could be about 35 lakh crores. So this is a company which is talking of 3x kind of a contract with the government. So obviously things are brightening or things are improving a lot, especially on the defense side. And unlike Air Force, I think Navy is something which has been delivering a lot of projects on relatively better timelines. So from that perspective, it does open up the prospect for Mazagon Dock. And while you'll see a lot of time taken in terms of commercial negotiation and final placement of order, but I think this is definitely a big beginning for a company like Mazagon Dock, so which is really chasing 3 times more the orders than it is what sitting on as of now.
Absolutely. We have often discussed the CDMO business as being a good opportunity in India in the coming few years. I think Syngene just came out with its results. What happened there?
So yes, we had seen a stock sort of correcting. I think there are 2, 3 things. While the numbers were okay in the current quarter because revenue growth was 11 odd percent, we have seen about nearly 300 bips kind of a margin expansion. But one needs to understand that at the beginning of the year, the company had guided for high single digit kind of a growth, which they have toned it down to about mid single digit. And reason what is being cited is that see the biotech funding in the US because of elections have been pushed back by about say 8 to 12 odd weeks. So nothing major changes. The outlook remains intact. It is just that things have been pushed by say about 8 to 12 weeks further. But in general, we like this space, and Syngene within that is one of the top or better companies with good capabilities to ride this wave. So we continue to sort of like Syngene, and we have recommended a buy with a target price of about 960.
Great. How about Spandana Sphoorty in the microfinance sector?
So pretty shocking set of numbers. What I would want to highlight is that when you look at company reported provisions of about 666 crores, which is 7.5% of your AUM. And when you also look at what they are saying is that this is not the end of the problem. So they had a AUM of about 10,000 odd crores. Now, of that, 30% is where the borrowers have taken multiple loans, which clearly means that the problem is quite deeper. And I think we still need to sort of wait it out for this segment, which is what a simple advice to investors would be to not to sort of do bottom fishing, because I think these numbers are definitely scary from that perspective. Because if you're taking a write-off of 7.5% and then you have a 30% AUM on which you have multiple borrowers, which is the core problem of the industry, then I think there are some challenges in this segment. So despite the correction, stock price correction, I don't think bottom fishing should be done. So it's a very short and sweet message I would want to give.
Absolutely. And finally, the most awaited segment, hidden gem of the week. Which will it be this time?
So I will recommend a company called Max States now with a target price of 741. Now premium segment has been doing very well. You look at Oberoi and Mumbai has been sort of doing phenomenally well. Max Estate is considered as the Oberoi of NCR region. Now, this company operates into 2 segments. One is the commercial segment. On the commercial side, they have a partnership or strategic partnership with New York Life Insurance, where that company has put in about 1,200 odd crores. So that segment, in terms of funding, is quite sorted, and our sense is that while they are getting rentals of say about 70 odd, 66 odd crores in 24, they have a fairly large pipeline, and over a period of time, we would expect these rentals to go up to about 700 odd crores. On the residential side, they're doing quite well. So they have a gross development value of over 21,000 odd crores. I think that they've sold about 6,800 odd crores. So next 2-3 years, they could be easily doing 14,000 crore kind of a plus launch pipeline. And my overall our sense is that since their cash position is also quite good, so I think this is one of the few companies which is quite sorted both in their commercial side and also on the residential side, and which is why we like this, given the fact that the top end of the market of real estate is definitely doing well, and which is why I feel that this company looks attractive with a target price of 741.
Absolutely. Well, thank you so much for that. That was our time this week. Thank you so much, everyone, for watching. And thank you so much, Pankaj sir, for your time and experience. We'll be back next time with another market wrap.
Thank you so much.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.